Welcome back to my videos. Today we're going to have not one but two separate analyses today. We're going to be looking at very similar charts. They are the US 30 as well as the SP 500. Quick update before we do that, I want to talk about my Telegram real fast. The last trade that we had on there was absolutely fantastic. It was a short on the SP 500, and I was able to win not one but also two separate FTMO challenge accounts. I wasn't able to fully win the challenge because I actually achieved the profit target in only 3 days. But like I just said, I did achieve the profit target. So expect that to happen in about 7 trading days from now, weekends not included. So with that being said, let's go ahead and get started. So here's the zoomed out view. I'm going to go onto that in just a second. Let me go onto smaller time frame first and show you what this analysis has to offer. So we can see that I have a diagonal here, and as we know from Ralph Nelson Elliott, we know that Elliott theory permits diagonals only in wave 5, and they also usually don't happen in the first place, but if they do exist, it is only allowed in wave 5, and that's what we have marked up here. And the reason why I used a diagonal instead of a normal count for this one is because we don't have room for this not to be the 3 and still respecting this line. I will get into why that line is so important in the very near future. Had this 3 not been here, it would have to be lower, of course, and then we could hardly even have a 5 fit in there at all. And just with timing, this looks like a better count. Now let me explain the pros and cons of this analysis, and then I'm going to go over another analysis with the US 30. Essentially, what we have here is the rules behind a diagonal, if you're not familiar, is the 4 does break above the 1. However, it does not, or above in this case because it's downward, but then below in normal case, it does not break above the 2. And it typically has 3 humps in between the 2 and the 4. It can have 2, so this can be the 4, but usually it's 3, so I like to put it right over there. And then we have a 5 wave that comes down. This is the lowest the point can be, so that's why I put the 5 there. It can be more to the right, it can be more to the left, but it can't break below that point without affecting this. Let me show you on the 1-day chart. Zooming on out. This is the first cycle wave. It is a cycle wave, right? Yes, it is the cycle wave. And this is the first cycle wave since the super cycle ended in 09. So it's the very first one, and we've already had a 1, 2, and a 3 all the way up here. So now we're expecting a 4 to happen relatively quickly. Let me zoom back over to our, let's go in the 4-hour for now. We'll go a little bit in between the 2 levels that we're just looking at, and let me explain what this ABC structure looks like in this particular case. Of course, we would not want the C finishing below that point. So this looks really funny for a good reason. Right now, there's 2 different ways I can see this happen. The first way is it has a weird truncated 5th I mean, if this finishes very soon and then the 4 comes up, happens like this, and then the 5 just barely doesn't, maybe comes down a little bit lower than where this 3 will actually end up. Say that 3 ends up there, then it's okay, then it's not even truncated 5th. That would be an okay analysis. That's something that may happen. How do we know if this count is valid? Well, if price starts to go up right now and it breaks this red line, this will be breaking this 1, and this is not the last wave, so it's not allowed to break this point here. Let me turn off the chart so you can see it a little better. It's a bottom here. This is the first wave. This 4 is not allowed to break above here. If we see price break above here, we know this is not right. What is correct? Well, maybe this 1 here is actually an A, this 2 is a B, and then this coming up here is really the last and final C. That's a possibility. That would be extremely crunched up, but it is a lot of price action on its own, so it's very, very much a possibility for that to be the case. Or it could happen as we have it marked up right now, or does that, and then it would have maybe a truncated C over here. Maybe the C doesn't go down all that much. Truncated C's are actually, they're not common per se. Usually C's do go below the A, but it's not super uncommon to see this. It's around in between 30 and 40%, I believe, for the frequency of truncated Cs. And of course, wherever the C goes is where this 4 goes. I have it all the way over here just for emphasis. And that will be the true end to this dramatic downcline. And then it'll just spike up new highs after that. Well, here's the other analysis. This is the US 30 analysis. And on this one, unfortunately, I haven't marked up all the preceding marks, but I did, let me show you really quickly, I did mark up the same line point on the US 30 right there. It's the same, you'll see it's similar. We see a nice A, B, C structure after it, so we know that's the correct point that we're talking about. That's the one wave on the cycle, on the cycle waves. And so what exactly do we see on here now? Well, here's another way to mark up the chart. I have a 1, 2, 3, 4. Now this 4 on both these charts, not just this chart, it was just so quick that on this one, I counted it as the 4. On the other one, I actually didn't count it as the 4. It's actually the 3 is still forming. Another one is what I said. So it's really a matter of what has really happened, what's really going on, to see which of the two analysis is correct. But again, this one is predicting that the very, very next downward move will be its last. It is also predicting a diagonal. What do we do if this bottom line is broken? We will reevaluate our markups and see if there's anything else available. Again, it is unlikely for this to be broken. So now's not, according to the charts at least, now's not going to be the worst time to re-enter in the markets here. It's predicting both of these two analyses are, whether it's just a fourth wave or an entire B wave, as long as you're not trying to hold for too long, now is a pretty good opportunity to potentially make some serious points in the market there. So with that being said, this is really what I want to show you very quickly in the markets. And I hope you enjoy this quick analysis. I will be posting these on my TradingView. And again, just as a second reminder, please check out my free Telegram. It's free for now. It probably won't always be free. So just get on it while you can, and I'll see you in the next video.